I do think that gold inflows will increase, and already we're beginning to see that again. It took a little dip over the last couple of months, but since the beginning of the pandemic, you've had record inflows go into these alternative gold instruments. What the rest of the world is beginning to have more confidence in are these alternative gold investments, as you said, paper gold like ETFs. But generally, that is where more sophisticated investors diversify their holdings to include this. But for most people, physical gold in India and China is still more accessible than more sophisticated ways of buying gold. And so while you'll see increases in interest in ETFs, I still think the majority of gold buying in both India and China will be in physical gold. When you look at the financial incentive of most portfolio managers, they get their best commissions from getting into the market. And as the economies recover, that's where they're going to direct their clients, and that's where they think they see the biggest opportunities. Where most of investment gold buying happens is really not because of a portfolio manager. It's because of the individual wanting greater diversification. And it's these individual sales that then drive the gold investment market. I think large institutions, large institutional investors that invest on behalf of other investors, they will keep a certain percentage of their portfolio into precious metals, and they'll diversify from not only owning part physical, but also part paper gold too. And so, they're not dumb. They know that they need a balanced portfolio. But for individual portfolio managers, if they see potential in the market, that's where they're going to direct most of their clients. So I think as gold prices increase, which is what my forecast is over 2021, there'll be more interest in gold miners. And that's because when you take a look at the all-in costs of extracting that gold, right now it's very profitable for gold mines to extract the gold. I've seen estimates that roughly to get an ounce of gold, a pure ounce of gold out of the ground might cost $1,200 or $1,300 all in. And gold being around $1,850 today, there's a margin to be made. And so there's an incentive for gold miners to produce. And as gold prices increase, you're going to see that incentive get greater. So I do think that there is interest. There'll be future interest by portfolio managers in gold miners. But I'd also put a slight caveat on that. And that is there are people who think that both gold miners as well as paper gold companies like ETFs, you have management risk in both of those. And what I mean by that is you're not just buying into the gold appreciation. You're buying in their ability, for example, in the miners, to be able to mine efficiently, under budget, et cetera. And with ETFs, you're not just investing in the gold price. You're investing in them leveraging that gold by finding every way they possibly can to make money by leasing it out for short sellers and all this other stuff, of which if the management fails in a mine, or the bets that an ETF makes don't pan out, those stocks go down even if gold prices go up. And that's why I think the vast majority of gold interest by investors will still be in physical gold, because you don't have management performance that will influence the price. It's supply and demand in the marketplace. And that's why physical gold is still one of the most popular ways to invest in gold in the world. it's not only how they manage their assets, but you're also trying to you don't know how much gold is in the ground, how large the vein of gold might be. The vast majority of gold being produced today is what's called placer gold. So they're going to the old gold mines that are all mined out, and they're grinding up all the stone around it to get gold dust, and then
Yeah.
combining that gold dust to purify into gold. That's a really, really expensive process. And so, to my knowledge, nobody has found a huge vein of gold, and there's more gold that they can mine for the foreseeable future. They are going after scrap rock and trying to extract every last bit of gold out of it right now. And that's one of the reasons why the production costs of gold for a miner is so high, is that it takes a lot of work to even get 1 gram of gold out of the ground.